his vacation? Everybody wants to know what Clyde's been doing on his vacation. We'll be starting in just a minute, folks. It takes a minute for YouTube to get going. All right, here we are. Let's get this going here. Let's get this going here. And we are live. Good morning, David. Good morning, Brian. How are you? Hope everybody is doing great today. War Dog is in the house. Omar's in the house. Infinitely's in the house. So good to see everybody here. Vernon's in the house. Jody, Billy. Thanks for giving me that middle name, Billy. It's hard to pronounce the first name. Timothy, Dave, War Dog, Gary. Moondog is in the house. Yay! Moondog is in the house. I'm so happy about that. We got Ivano, Dave, Ed, Pat, Deanna, Carrie, Cam. Cam, good morning, Cam. Duzzy's here. We got everybody here. I love it. I love it. Let me just put good morning here and we'll start. Good morning, everyone. There we go. Hope everybody's doing great. Jose, good morning. Let me go ahead and share my screen because it'll be pretty boring show watching me for the next hour. Not nearly as much fun. But my camera is working, which is great. Boy, I'm getting gray. I'm looking at my face. I'm definitely getting gray. It's coming upon me. Ricky, Angie, Steve, Dr. Serena, Robert, Delbert, Zen Master, Richard, Robert. How are you guys? Michael, good to see everybody. Good to see everybody. Karen, I don't know if you're in here, but Karen, if you're here, good morning too. I saw you posted that a feedback about me at that nasty website yesterday. I do appreciate it. Very, very nice of you. CJ, good morning. Patrick, good morning. Peter, good morning. We'll be starting in just a minute. I'd like to give folks about a minute to get in. Nestor, Kenneth. Good morning, everybody. Let's get this party started. Yep, 101.5 minutes. Now we got 140. All right, so I'm still tweaking my camera. 1 second. All right, I'm trying to get the least amount of space between my head. It's bugging the hell out of me. All right, so as you guys can see here, the Dow is up this morning. It's up about 66, random, but nice and positive. The Russell's doing okay. Took a little bath yesterday. The E-mini S&P is positive today. Karen, thank you for that testimonial. Very, very nice of you. I appreciate it. Very, very, very nice. I really do appreciate it. I hate when people make me look like some clown. Kim, Jill, good morning. Nina, good morning. Ken, good morning. Nestor, good morning, everybody. Also, don't forget, Customer Service Live from 10 a.m. to 1 p.m. I know a lot of folks wanted to know about the 9010. I know that Cam will be talking about it. Please, please, please visit Customer Service Live from 10 to 1. The link is in your window, okay? The link is in your members area, I mean. Also, if you missed my seasonality class, here is a link for that. There's a replay of that link that's happening. There you go. And join me in my VIP room at noon today. I don't have a webinar, so I'm going to be hanging loose, hopefully trying to get some trades going. But I hope to see you guys there at noon. And again, don't forget Customer Service Live. Now, before we begin, I just wanted to show you something really cool, okay? Hey, Kurt, good morning. So yesterday, we talked about the 90-10 to the short side. And I showed you how, I showed you how I liked this when markets are breaking down. So I'm going to use the time back machine, and I'm going to go back to yesterday. So this is yesterday. You could see August 1st. So I want to show you a few stocks that I showed you yesterday, okay? And they are now on my watch list. We will be talking about them, but I just wanted to review to show you the efficiency of this. One of the stocks I talked about was British Petroleum. I talked about AD&T, and I talked about Cracker Barrel. If I did not, or if I mentioned, if I'm missing something, please let me know. But I believe I talked about Cracker Barrel AD&T, and British Petroleum. I also mentioned Target because it was earnings today. So I didn't, I just mentioned it. I didn't tell you to do anything on Target, but I mentioned it. But I did talk about a short on BP, AD&T, and Cracker Barrel. So I want to show you something. So the first one was BP. Well, thank you for that advice, Rajandra. We do that every day. So you see how this is today right here. This here. This is today. This is yesterday. See how it's coming down? 90-day high, 10-day low, 90-day low, 10-day high, and now it's coming back. Okay, what's the other one? AD&T. AD&T. Good morning, RP. Look at AD&T. It can't get any better than this. 90-day low, 10-day high, breaking back down. And how about Cracker? These are all the examples I gave you from yesterday. I just wanted to go back. I'm doing what most gurus don't do. I'm bringing back accountability. Don't you guys love that word, accountability, for what you say and do? Wouldn't it be great if every guru was accountable, right? So you see how Cracker Barrel broke the low yesterday and how it's now at the 8 line, and now we're expecting it to come down. By the way, every one of these 3 stocks is on my watch list, and I'll be talking about them later today. But I just wanted to show you, that's the example I gave you yesterday. Hey, Eagle, can you please not post stocks that we have in other programs in here? I'm managing Oracle. Oracle please don't put stocks that I am managing those trades. I'm managing Oracle. Don't put trades that we're currently in, please. But set up Oracle, like them both, got in. Yeah, I like them both. That's why I called them. Now Clorox was a bonus trade, but if we're still in any trade, just don't mention them, please. Okay, so let's now talk our analysis. Just wanted to give you a little bit of my accountability from yesterday. So earnings, we had earnings this week. It's okay, don't worry about it, Eagle. I know you're going through some stuff right now. It's all good. We're still in those stocks, guys. There's nothing to gain or lose. We're still in those stocks. I don't know why you're talking about. We literally got into those stocks last night. Please, if we're in stocks, if I have not given you an exit signals, please do not mention the stocks here live. It's disrespectful for people who have the programs, okay? Okay, so Target came out with earnings better than expected. TJ Maxx came out with earnings better than expected. Also, ADI came out with, I don't know why ADI is not on here. It's a major chip stock. It came out with earnings and it's better than expected. Okay. Yeah, Rice and Eagle, we're in both stocks. I mentioned that Oracle is a swing and Clorox is a bonus. We're in both stocks. All right. So the market is bullish. Earnings so far have been better than expected. Here's ADI beat sales estimates. TJ Maxx beat estimates. Target beat estimates. So far, so good. It's okay, Rice. It's all good. It's all good. But just out of respect for people who paid good, hard-earned money for their programs, please don't put stocks that we're, and especially stocks we're currently in. All right. So let's talk about news. We have FOMC minutes today. That's going to be a big report. Another big report is we have jobless recalibration of jobless reports. I'll talk about that in a second, but that's another big report. I don't know what time that is happening, actually. It's not on here. So I don't know what time that's happening. If anybody knows what time that's happening, please let me know, okay? Please let me know when the jobless claims recalibration report is coming out. Excuse me, but I know that FOMC is coming out at 2 p.m. I don't think that report is going to be very instrumental because the last time we had the minutes, the Fed was really uppity for September. I remember they were very, and a lot has changed since then. Not a lot. A little bit has changed since then. So remember, this is a report that goes back to a month ago. So I don't know how dovish or bearish the Fed is going to be from a month ago when things were still looking pretty good. Hey, Kimberly, good morning. Good morning and welcome. and tomorrow we have the actual jobless claims. The big report is going to be Friday when he speaks, and everybody's expecting him to talk about how they're going to lower rates in September. And I think he's going to say, I'm not so sure. I'm not so sure we're going to do that. So we got to overcome this week's, but we don't have that many earnings. And today, hopefully in the VIP room, if I get the data, I will be able to, good morning, Tony. I will be able to give you guys the earnings scorecard on the retail sector. And the retail sector is very important. And it's one of the biggest reports that we pay attention to. All right, crude oil. Crude oil is kind of between a rock and a hard place right now. You can see that we're below the 200-day moving average. We're below support and resistance. Just not much happening. I believe crude oil is waiting to see what happens with the reports. Also, we have a pretty big report on crude oil today, the petroleum status report. I don't think that's going to be a big trigger. I think crude oil is waiting to see if we're going to have a soft landing or a hard landing. And notice this consolidation. I think crude oil will be in this consolidation for quite some time. And if that's the case, we're not going to be buying any crude oil stocks anytime soon. We may be shorting them because we're below the 200-day moving average, but we're not going to be buying them. Kenneth says, read a report on last year's revised job report where out of the first 9 months, they revised 8 of those down from a total of 360 misreported. Yep. Thank you, Dr. Serena. Kenneth, I'll be talking about that literally in just a few minutes. Thank you for that feedback, and you're absolutely right. And I'll be talking about that in just a few minutes. I just want to finish the commodities section first before going into that, okay? Also, if you happen to be short crude oil, thank you, Dr. Serena. If you're short crude oil, there's a major support level around 72. You may want to pay attention to that. So if you're short CVX or one of those stocks, because I mentioned it yesterday, there is a pretty strong support level right around the 72. Okay. All right. 10-year. The 10-year is still in our channel. The 10-year is waiting for FOMC minutes, and it's also waiting for Friday's report, this report right here, and new home sales. But the big report is going to be Jerome Powell and what he says and today's FOMC minutes. I think till that time, we're going to stay in this range. Just so you know, while the bond market stays consolidated, it will reduce volatility in the stock market. Remember, the stock market gets its directional bias from the bond market, and the bond market gets its directional bias from the currency market. So if you see less volatility in the bond market, you can expect slightly less volatility in the stock market. But notice, if we break down from here, this will be a continuing of a descending triangle, which can break to the downside if Powell doesn't tell investors what they want to hear. Basically, if the kid doesn't get his bike in September, we can break down hard. And that would mean higher interest rates, bonds going down, higher interest rates. That is not what the market is pricing in right now. The market is pricing in a beginning of a deflationary cycle. Gold still moving very, very nicely, making all-time highs. I gave you a bunch of stocks earlier this week. Or last week, Newmont Mining. I gave you Newmont Mining. If you bought Newmont Mining on a breakout right here, as I told you, we saw one, you obviously would have been making money. I also gave you I believe, another gold stock. And that has broken out too. So if you listened to me on my gold analysis, you would have done good. I am still bullish on gold. If I see a gold stock breaking out, I will take that trade. Because why? Why not? Gold is breaking out right now. Also, I'm a little nervous about the overall market with gold breaking out. But if we stay in an inflationary zone, which we will find out if we will or not, that could mean more upside for gold, especially if bonds go down, because investors will be taking their money out of the bond market and putting it back into stocks and gold. All right, volatility. Volatility look how it came back down, but it came right to the 15 level, and it's now turning, and it's staying at 16. It's not falling back down. And the reason for that is we are all anticipating today's and Friday's report. The big problem is about 6 months ago, 3 months ago, the expectation to lower rates was not nearly as strong as it is right now. It was about 60% of where we are right now, maybe 70% of where we're at right now. But based on what we're seeing right now, there's a strong presumption in the market that the kid is going to get his bike in September. Now, you know what I think. I think it's still going to be November. I don't think it's going to be September, because I don't think the Fed wants to have eggs all over their face. But the market is pricing in September, which means we could see some really nasty downside volatility if that is not the case. If that is not the case, okay? So let's just be very, very careful and watch volatility, because if you see volatility spiking, that's not good for the market, all right? That is not good for the market. What sectors will that impact? Pretty much all the sectors that are it won't impact utilities. It's not going to impact healthcare, but it will impact every other sector, especially consumer staples, consumer discretionary, technology, and everything that's very interest rate sensitive. So keep an eye on volatility to break higher. Keep your eye on the bond market. If the bond market breaks down, that means Fed is not planning on lowering rates in September. If we go higher, then all bets are off, and Fed is going to be planning on lowering rates. All right, let's put everything together. Now, notice we just spent 16 minutes. We haven't even really talked about the stock market yet. We're only now going to start talking about the stock market. We needed to lay out what's happening today. We looked at the schedule for the economy. We looked about earnings and which ones outperformed. Then we talked about commodities to see if commodities are going to give us a tailwind. We talked about the 10-year. We talked about gold. We talked about volatility. And also another thing we want to talk about is China. China yesterday and the day before started cooling off. And when China cools off, it means, see how it's breaking down through the moving averages here? See how it makes lower highs? See how it's breaking down right now? Well, if China breaks down here, Baba, Baidu, all those stocks will be in the toilet again. So just another thing to keep in mind. So we're getting a broad picture. We're getting the broad strokes. Thank you, Eagle Beagle. I love that. Eagle Beagle. Oh, yeah. Also, don't forget Customer Service Live from 10 a.m. to 1 p.m. Monday through Friday. All right. Also, don't forget, I have a replay if you want to know how Wall Street's biggest players front run stocks. Here's a link. And if you want to join me today at noon in my VIP room, please do. I don't have a webinar today, so I will be hanging out with you guys and having fun. So we're going to be very cautious about China. We're still bullish on gold. Big question mark with the bond market. And crude oil, I would be more short than gold, but I wouldn't be making big bets because we're near support level right here. All right, let's talk about the overall market and the economy, okay? Federal Reserve's July meeting minutes for further clues on path of interest rates. That's what we will see. But again, they were still pretty dovish in July. I mean, not a lot has changed, but the employment wasn't as bad. They were all pretty jovial in July. So I think the confirmation will just be if things remain the way they are, they're going to take action in if the job market continues cooling off, and if we see that Fed data is coming is cooling off, we will consider taking action. But again, I want to see what he's going to say on Friday because we're getting pretty close. I think he's just going to say we haven't made a decision yet. We're still We're still, but see, now when he says it, it'll have some meaning because now everybody's expecting. It's kind of like the kids are now, okay, we're all the friends are like, okay, where's Johnny? Where's Johnny with that bike? Where before they were like, he's full of shit. Now they're like, where's Johnny? Where's that new bike? Where's that nice new bike? I don't see him. I don't see him. Now they're all looking for him. You see the problem? Before they were like, maybe we'll see him. Maybe we won't. Who knows? He's been flaky. His dad hasn't had a good job in a long time. But now things are a little different. Things are like, okay, where is the bike? Where is the bike? So now if the bike doesn't come, they're going to think he's a big liar. Just want to kind of give you a little bit of both sides of the scenario. Boeing slit. Boeing is just having the worst luck, right? Top percentage loser in the Dow. Paused their test flights on, and they called the plane 777, and they've cracks in crucial structural components. I mean, think about it. 7, lucky 7, crucial structural components. Stock is down 4%. I wouldn't be surprised if we saw more downside in Boeing. By the way, Boeing and Caterpillar are two of the most difficult stocks to trade. They're like yo-yos. All right. Bank of America fell because we found out that Uncle Warren Buffett liquidated some of his Bank of America share stocks. It's also looking like a potential 90-10 setup. I showed you those 90-10 setups. 90-10 setups are really good when the market's been moving one way or another for an extended period of time. See, 90-day low, 10-day high, breaking down, couldn't break the moving average, breaking down again. See that? Just something to think about. Something to think about. Let's continue. Pan W climbed. Earnings were great. So far, earnings have actually been. It's really ironic. I'll tell you something really ironic. Remember, we had this huge divergence between FANG stocks and non-FANG stocks, like a huge divergence. And I was all over the equal weighted indexes and showing you all the differences. Well, this thing right here. I'm going somewhere with this, trust me. So this right here, this 15% slide on the QQQ completely corrected it. This happened when FANG earnings took place. Here's the irony. The irony is this. The irony is that the earnings on the FANG stocks were bad, but most other stocks, even tech stocks, earnings were actually pretty good. They weren't that bad. It really seemed like those expectations. Remember, I was really worried because FANG had those expectations. It couldn't meet those expectations, but most other stocks did. Peter says, I don't understand the 90-10 on Boeing. Bank of America, sorry. Well, here, let me show you. The stock made a 90-day low. Within 21 days, the stock made a 10-day, the stock made a 90-day low. Within 21 days, it made a 10-day high. Right here. And now it's breaking back down. The good thing you have here is you have the 100-day moving average. It couldn't break it, and now it's breaking back down, and it's going towards fair value. Do you understand it now, Peter? 90-day low, 10-day high within 3 weeks, and now breaking down again. Only on stocks that have a very strong predominant trend. That's a strong predominant trend. So it looks like we want to test either fair value or the 200-day moving average again. Does everybody understand what I just said? Period. I don't understand. Anyways, let's continue. Peter, if there's any other questions, feel free to send me an email. Here's my email address. roger@rogerscott.com. There you go. All right, let's continue. All right. Bowman said Tuesday she remains cautious about any shift in Fed's policy due to what she perceives as a continued upside risk of inflation. All right. warning that overreacting to any single data point could jeopardize the progress already achieved. Egg all over their face. They don't want things to come back. They're not thinking right now about how to make you happy. They're thinking about how to cover their ass if they start making adjustments and it comes back. From the 90-day low, from this point right here, Peter, from right here, 90-day low. It made a 90-day low. See that? 90-day low. Now, within 3 weeks, did it make a 10-day high? Yes, it did. There we go. But boom. Don't overthink it. Think about the concept of it. The concept of it. Basically, you're trying to catch a stock that's been going down for a long time, and now the market is going up, but the stock is still lagging, and it wants to turn. And as soon as the market turns, the stock is going to turn back down. Long-term trend down, short-term trend up. 90-day low, 10-day high. Long-term trend, short-term trend. Let's do it upside. 90-day high, 10-day low. 90-day high, 10-day low. 90-day high, 10-day low. Got it? I know, it's brilliant. I only created it like 20 years ago and been giving it away for free to anybody who wants it for the last 15 years. People want some fancy schmancy cockapoo stuff. They don't want stuff that actually works. So let's look at what she says. See, she's saying the same thing I'm saying. Don't look at single data point. Don't overreact. Continued upside inflation. Does that sound to you like she's ready to lower rates? It is, Eagle Beagle. It is. It is. I still see some upside risk to inflation as supply conditions have now largely normalized, and any further improvements to supply seems less likely to offset price pressures arising from increased geopolitical tension, which I see, by the way, in China. Additional fiscal stimulus and increased demand for housing due to immigration. Now, I agree with her 100%, actually. Yes, that's right, Peter. I agree with everything she said. But if you listen closely to what she's saying, it doesn't sound like she's saying that we're ready to lower rates in September. Correct me if I'm wrong. Maybe I'm crazy. What do I know? I mean, what do I know, right? I've only been doing this for 30 plus years successfully. Futures are now pricing in a 69%. This has not really changed. They are now, there's like a 70% chance that they're expecting a 25 basis point rate cut and a 50-point raise. And this poor lady saying, I don't even know I don't think we're ready for one. So the point is, I think this is very accurate if you push everything 3 months forward. I think we're almost there, but we're not quite there yet. And by the way, I've been saying that for a year now. For a year. Okay. Robert says, what do you think big move is? I don't know. I don't know, Howard. I don't know. Don't ask me questions. If you guys have questions, send me an email. I want to make sure I get to work within an hour. My job is to get to work by the time the market opens. I'll take a look. If I have a few minutes, I'll take a look. All right. Now this is what, who was talking about this? I think, who was talking about this? Tony was talking about this. Mark, now, do you guys know what time this happens? Can somebody help me out? Can someone help me out? Because I don't know when this will happen. Market participants will closely be watching the release of preliminary benchmark revisions to the U.S. employment data for the 12-month through March, scheduled for later in the day. Signs of weakness in the annual recalibration could underscore the need for aggressive rate cut and evoke memories of the market turmoil in August following a disappointment payroll report. Does anybody know what time this happens? I don't see it here. I don't see it. Can anybody help me out and tell me when that is happening? Please help me out. Goldman Sachs, Wells Fargo economists anticipate that payroll growth in the year through March was at least 600,000 weaker than the current estimate. while JP Morgan forecasts a decrease of about 360,000. Goldman suggests it could be as large as 1,000,000. At 10 a.m., okay, well, quarterly service survey. Okay, well, we'll see. We'll see. But that could be pretty important. Thank you. Thank you. I don't know how to pronounce your name, but thank you. Thank you. Yeah, at the Democrat convention. Good one, Curious Cat. All right, we got crude oil inventories. We have a whole bunch of stocks reporting today. I know it doesn't seem like a lot, but folks, I'm telling you, I don't know if you've noticed Target before, but these can, thank you, Brian, I appreciate it. Thank you all. Thank you for your help. But these can really move the market. Target, TJ Maxx, we have chip stocks reporting, we have Macy's, retail. 70% of retail spending is retail spending. Europe is up a hair following this morning's risk sentiment stabilization. Investors are looking ahead to the Fed July minutes meeting. I am too. That's going to be today at 2. Preliminary revisions to U.S. labor data. That's happening, as you guys said, at 10. Thank you. I appreciate that. Mining and tech stocks climbed on Wednesday. Notice mining, pretty defensive. Technology, pretty speculative. Both climbed on Wednesday. Energy stocks lost ground. It's really interesting to see tech go up and energy lose ground because energy and technology actually are fairly correlated right now. They are fairly correlated right now because we're in an inflationary environment. This is something we have to pay close attention to. Thank you, guys. I appreciate all your... See, I need help too sometimes. China's Shanghai closed lower today. It's not like I know everything too. I'm just like you guys. I'm just like you. We're all part of the same team. Falling for the second consecutive session as the absence of new stimulus measures continues to weigh on investor sentiment. Keep your eye on the Rokus and the Baidus. Not the Rokus. I confuse Roku and Baidu. Keep your eye on the Babas and the Baidus. Biotech stocks led the decline. There's also some Chinese bank stocks like Cathay. Oh God, what is the Chinese bank stock? I got a loan for them once for an apartment building. It's Cathay. It'll come to me, but there's a public bank stock that we all need to pay attention to. I got a loan from them for an apartment building about 15 years ago. Ken says that's what I'm hearing is that September or October, that revised jobs could be overestimated up 1 million, which would mean that they have only added 9,000 jobs this year. Yeah. Carthay. I think it's called Carthay. Carthay. Hold on. Let me see. Hold on. Cathay. Yeah, this right here. Chinese bank. Yeah. In Los Angeles, right there. I remember. I don't forget. But keep your eye on all of that, okay? Macy's stock fell 9.8 after the department store chain missed market expectations. Meanwhile, Target and CJ, but you know what? We were expecting that from Macy's. Remember last quarter when we were talking about Macy's being a buyout candidate, and I said, "Don't hold your breath," and they said, "We're not going to do it," and I said, "I'm not surprised." No, Cathay is Chinese. Cathay is Chinese. I know that because I got a loan from them. Look, they are not. I know that. I got a loan from these rascals. Cathay Bank. Chinese America Bank. Chinese, right here. Chinese. I know because I got a loan from them. So I actually did business with this bank. There's a big loan too. All right. Japan closed lower as overnight gains in the yen dampened sentiment. Investors adopted a cautious stance ahead of the release of the minutes and revised U.S. employment data. That will be very impactful. Texas Instrument got upgraded, good for chip stocks. ADI also got upgraded, good for chip stocks. American Express got downgraded by Bank of America. Now, I always think it's really, don't you guys, yeah, Cathay Pacific, that's right. Don't you guys think that it's kind of odd and conflict of interest when a Bank of America upgrades or downgrades their competitor? Wouldn't it be kind of odd if AMD upgraded and downgraded NVIDIA? Right? Don't you think there should be some laws by the FTC in place for them not to do that? Now, I think that would be very reasonable. Okay. But they think this is perfectly kosher. See, I think it's completely illegal for Bank of America or American Express to talk about their competitors. But here we are. That's pretty much it. Chewy slid, but nothing major. But again, TJ Maxx, Analog Devices, Target, Snowflake. We have a lot of earnings. Yeah, they trade across the table from each other. That's what I'm saying. There should be a restriction list. Like a congressman shouldn't be trading stocks. Similarly, an American bank shouldn't be upgrading or downgrading another bank. I've been odd when I read these particular banks that are issuing opinions about others. Yeah, it's bad corporate government. It's exactly what Carmen just said. It's bad corporate governments. That's right. Yeah, Carlos, I had a loan from them. Dr. Serena, my actuary, over 400. All right. Let's stop messing around. Let's talk about momentum levels. So momentum levels are stable. Markets are still picking up steam. Nasdaq is up 41. We should be expecting a fairly solid opening today. Commodities are doing okay. I'm nervous about China. I'm nervous about interest rates. I'm nervous about everything. I have anxiety. So that's why I'm nervous. Momentum level in the S&P 500 is very stable right now at 70%. Energy is the only sector that's really taking it under the chin. Everything else has been able to move up. I'm still seeing a lot of vulnerability in the Russell 2000, which tells me if the market cools off, the first sector to take it under the chin will be the Russell 2000. You might have seen yesterday when the market cooled off towards the afternoon session yesterday, Russell was the first one to go negative. That means there's still a lot of pressure on these stocks. And I'm short the Russell 2000. I'm not going to mention what program we're in, but I am short the Russell 2000. Still a lot of vulnerability on the Nasdaq 100, but not as much as there was a week ago. And as you could see right here, momentum levels actually did not improve yesterday. They actually went a little lower. And overall, we still are not in 60th percentile across every stock. So we still have a substantial amount of vulnerability. How's Clyde this morning? Well, funny you should ask. Funny that you should ask. Clyde just got back from his holiday. This is him last night. And this is him this morning. Clyde is back. Clyde is back from his vacation. He's back. So you could see Clyde is in full. That's Clyde. All right. You asked about Clyde. All right. So momentum levels on the Nasdaq and the Russell 2000 are still a little, what about short-term momentum? Semiconductors, technology, consumer discretionary, QQQ. Are they looking good? Yes, they're looking great. Am I ready to buy every tech and chip and all those stocks? Hell no. I want them to go through. He's very well rested, Karen. He's ready to do trades again today. Thank you, Curious Cat. Speculative, retail, QQQ, consumer discretionary, but not interest rate sensitive, not interest rate. Speculative, but not interest rate sensitive. Interest rate and blue chips are taking it under the chin. Bitcoin is still not happy. Real estate is still not happy. Utilities, this is interest rates. This is just so let me explain. We got 3 doors. That's right, Cam. Customer service live from 10 a.m. to 1 p.m. every day, Monday through Friday. Link in your members area. He's very nervous about the market, but he's rested. So let me help you guys with this. Let me help you guys with this. The way I look at this, I look at it in three different doors: deflationary, inflationary, recessionary. So when you see Bitcoin up here, when you see utilities up here, when you see Dow Jones up here, that means the market is feeling recessionary. It's fearful. Harry didn't do much filling in, Jill. Well, the market hasn't given us much either, but you're right. But Clyde is back. Then when markets get deflationary, you start seeing what we're seeing right now. Deflationary, semiconductors, technology. And then if markets get inflationary, you start seeing consumer staples. You start seeing stocks that are impacted by inflation come up here. So we tend to move from deflationary, inflationary, inflationary, and recessionary. Right now, we're moving towards deflationary. A few weeks ago, we were in recessionary. Then we moved to inflationary, and now we're moving to deflationary. No, I think today we're going to have some movements. I think we're going to have some volatility, but I don't know how much of a movement we're going to have because of Friday. But I think we're going to have some volatility today. Volatility and movement don't mean the same thing. For example, look at eBay. I told Matt to buy this stock, but he didn't listen to me. Actually, I told Harry to buy this stock, but Harry didn't listen to me. So you see how this stock has a lot of volatility, but it doesn't move a lot? We may be seeing something like that today. All right. So momentum levels are favoring deflationary. Does that mean we're going to be moving into every tech stock and every consumer stock? Hell no. How does the market look? SPX. Let's look at SPX. SPX is still, we're now above our key level. We're about to enter the all bets off by long stocks. We're about to enter that area. We see if we will. QQQ is above the 50-day moving average, not at that area yet. Still have some more to go. There's clear upside momentum on the QQQ. Semiconductors, let's look at semiconductors. Are we ready to buy semiconductors? Stuck below the 50-day moving average. So wait a minute. You're telling me QQQ is looking good, but semiconductors are not looking really good, but semiconductors are not looking good. So what sectors of the QQQ should we be looking at? Well, there's software, there's hardware, there's a lot of sectors other than computers. Like, for example, look at networking stocks. Look at networking stocks. What have networking stocks been doing? What have networking stocks been doing? Matter of fact, let me show you something. I just want to talk about health tech for a few seconds. Just let me show you something real quick. This is yesterday technology. This is from yesterday, okay? Technology. What has software infrastructure doing yesterday? So are all sectors of technology weak right now? What kind of stock is Oracle? Software infrastructure. Infrastructure. How did software infrastructure? All this, the tech yesterday did bad, but how did software infrastructure do yesterday? I've said enough. All right, let's continue. Yes. So always look at every sector and subsector. Don't just go looking at at don't just go looking at this and this is good for the big picture. Don't try to go in, try to understand what's really moving. All right. So let's talk about sectors more in depth real quick. S&P almost at all-time highs. QQQ has to overcome a resistance level. Russell 2000 looks like it's cooling off. Financials look like they're flirting with all-time highs. Semiconductors don't look all that great. And if they can't come up to right here, well, you guys all know what I think. Consumer staples is rocking and rolling. It may be time for consumer staples to step aside and for some speculative sectors to come in if the reports are good this week. Energy is just falling apart. Utilities, again, defensive is doing really, really great. Healthcare is doing really, really great. Real estate is doing really, really great. Bitcoin is not. Industrial is near all-time highs. Technology, we're at that peak right now, but you saw that some sectors of technology look fantastic. Communications almost at an all-time high. Retail looks like it can go either way. Basic materials look like it's struggling. Home builders looks like it can go either way. The Dow blue chips are looking good. Mid caps are looking okay. And consumer discretionary isn't looking fantastic. All right. Now, what about key levels on major indices? Be careful when you guys are looking at things that you're looking at the right thing. That's all I want to say. Levels. All right. The SPY is near the 561 level. The next level is 565. To the downside, the next level is 566. So you got 561, couldn't break 561. 556 to the bottom and 564 to the upside. QQQ. Look at that, 426 people here. We're right in between two levels. The next level we need to break is 489. On the downside, it's 475. On the Dow, we're right in between a rock and a hard place. The bottom level is 408. The top level is 411, say 412. SMH. Do I ever use volume profile? I do, and I will introduce folks to it, but it's a little too early for that. We'll get to volume profile. We will. And here, SMH, we tried to break through this level right here. Really couldn't. We're either going to go, let me raise this a little bit. Yeah, there we go. There we go. Right there. We're either going to break this level and go above the 551 level. The next level is 558, or we're going to come back into this range and go into 233. 233. What's leading right now overnight? Let's see. QQQ's up 0.20. SPY is up 0.19. SMH is up 0.36. So tech is leading right now. All right. So I gave you the levels. Let's talk about individual stocks, shall we? Remember, customer service live, 10 a.m. to 1 p.m. If you want a replay of my seasonality and learn how I trade seasonality, how we had 10 winners in a row, there we go. And if you want my VIP room link, here you go. And if you want a link for Customer Service Live, aka Cam and Gustavo show, it's in the customer members area. All right, let's talk about stocks. Are you guys getting benefit from this? Also, as I said before, semiconductors. If we don't break this 50-day moving average, no soup. All right, let's do this. ADM. This is a this is a 90-10, by the way. And this is an A line and a 90-10. 90-day low, 10-day high over the in the next 21 days. Check, breaking below the A line and breaking back down. So this is a 90-10 and an A line. It's a double whammy. You like double whammies? Everybody likes double whammies. Moderna, A-line stock to the downside. Curious Cat says, took me 20 years to learn what you teach in a day. Hey, better late than ever. PBF. There's not a lot of momentum to the downside. Ugh, what a breakdown. Val. Am I helpful? Is this helpful to you guys? Let me know if this is helpful. Okay. What a breakdown on Val. British Petroleum. Hey, I remember this stock. How did it make it on our radar? Well, it happens to be an A-line stock and a 90-10. We talked about it. 90-day low, 10-day high, breakdown. Good. Good. Good, good. Hopefully I guess Harry hasn't been that helpful, but I'm trying to be helpful. Good, Mark. Good. Look at that. Nice breakdown. AD&T. How did this stock get on our list? I showed you yesterday. You're welcome, guys. You're welcome. It's a 90-day high, 90-day low, 10-day high breakdown, and it happens to be right at the A-line. That's an A-line stock. All right. How about Cracker Barrel from yesterday? Yep. No, PBBF is not an A-line. PBF is a breakdown. 90-day low, tested the 50-day, couldn't break through, right at the 8-day MA. If it breaks through, we have a perfect 8-day breakdown. PBF, see, look, PBF. Let me show you. Just a straight, yeah, it is an A-line stock, but this is more of a breakdown. Brian, if it was right here, I would say it's more of an A-line. This is it's already turned into a breakdown because it broke the low. I don't know infinitely, you never know, but you're right. It is technically an A-line stock. Whenever it breaks the all-time low, I just call them breakdown stocks. Let's look at the upside now. EQR. Cisco. Yes, Cisco. But Roger, this stock was a short stock just 2 weeks ago. And look how it's breaking out. It's a software infrastructure stock. Software infrastructure stock. Now, after watching this today, if you guys are in my pit, because we've already let the cat out of the bag, after watching this today, do you have a better understanding of why I got into Oracle yesterday? I don't know if it's going to do well or not, but at least do you guys know why? Can you guys now understand why I got into Oracle yesterday? Let me know. I'm curious. Walmart. I wanted to wait till Target earnings came out to do anything on Walmart. The only reason why I didn't recommend Walmart was Target earnings. You guys know that already. All right, good. I still like eBay. I'm going to have to. I told Matt to get eBay, but he's stubborn sometimes, that Matt. Now, I don't know if the trade is going to work out or not. I have no idea. I'm not a mind reader, but I wanted you to understand why I got into the stock yesterday. All right. eBay. I like eBay. I like Triple M. Looks really nice right now. Colgate. Paul says data center software. I'm not familiar with that. Thank you, Carlos. Yeah, I like eBay. I gave it to you guys in the VIP room, I think. Sure. Keep an eye on this stock. HR Block, IBM. I still like IBM. Yep, that's right, Avatar. They sure are. Nice breakout. I told you about this stock about 4 or 5 days ago. I drove an ascending triangle, and guess what? Sienna. It's a healthcare stock. Look at that, 450 people, almost an hour. Stock looks like it's almost in the gap. You guys like those gap stocks, huh? Almost in the gap. And last but not least, VRNS. Got it. VRNS. All right, guys, that is my list for today, and I'm sticking to it. Again, I don't know how the day will unfold. I don't know what the market will do. I have absolutely no clues, but I do know that the market is opening up bullish, and Nasdaq is starting to lead a little bit. Here is a link. Here are all the links for my services. I'll give them to you guys together. Hope you guys enjoyed this program. I will see you in my VIP room at noon today. Don't forget, customer service live from 10 to 1 p.m. All right? Bye, guys. Have a great day, everybody. Love you all. Thank you for being here. Thank you for joining me. If there's any questions, roger@rogerscott.com. Bye. Hopefully, I'll make it to before the market opens.